Good morning, everybody. We have a busy day today with a lot of good information coming. Before we do that, though, I think I can probably put all of you could have a new job change and become meteorologists. As long as there is a FAC meeting scheduled, you can pretty much guarantee it's going to snow. So at this point, I feel like we can take that to the bank. But after that, what we're going to do is we are going to start out with John Paul, who is our, let's see, is it senior? What's your title, John Paul?
Signing director or just
Okay.
auditor, whatever works.
Okay. From Clifton Larson Allen, who have finished the district's fiscal year 21-22 audit. And so we're going to go ahead and kick off the meeting with you, John Paul, if you're ready to go.
Sure. And I'm trying to turn everything on here. Am I able to share my screen?
Yes.
Oh, he can't. Okay, perfect.
Okay. Is that working?
Yes.
Okay, great. So my intent, again, my name is John Paul LeChevalier with Clifton Larson Allen, the accounting firm that the district engages to perform the annual financial statement audit. Did have a similar presentation to the Board of Education, I guess about a week ago now. And so the intent is to kind of go through similar information as what was presented to the board, but to go maybe just a little bit deeper and with a little bit more explanation of kind of what's included in what was discussed. So if there's any questions at any point during the presentation, any discussion items, comments, anything like that, please feel free to interrupt me and be happy to kind of take any items as they come along. Okay, so did want to start with a quick recap of what our responsibilities are as the auditors. Really, we are engaged to review the annual financial statements, and so that is our primary role and responsibility. So at the end of the day, what we're trying to do is make sure that the financial statements are accurate, materially accurate, so that there's no errors within the financial statements that would have an impact on someone making a decision, the board or the Finance and Audit Committee about the overall financial position of the district. And so part of that is also reviewing internal controls, making sure that the structure of all of the processes of the district are in place to be able to support good financial reporting and accounting processes. So as part of that, we did issue an unmodified or informally referred to as a clean audit opinion, which means that after all of our audit procedures, we do believe that all of the amounts presented within the financial statements are materially correct. So that unmodified or clean audit opinion is the highest level of audit opinion that the district can receive, and it's also the one that it should be expecting to receive each year. One thing to keep in mind is that as the auditors, we're basically double checking the financial statements. It's still the district's responsibility to make sure that the financial statements are accurate, that all of the processes, everything that goes into the accounting and financial reporting is properly designed, has good internal controls, good segregation of duties, etc. So again, that's kind of our quick overview of our responsibilities as well as what was included within our audit report. So in terms of the scope of the audit, we do have essentially two different primary focuses within the audit each year. The first is the financial statement audit, which includes most of the annual comprehensive financial report, which is really the document that includes all of the information. At the very end of that report is what's referred to as the single audit. And what the single audit refers to is the audit procedures performed over federal awards. So the district does receive, I think in the last year, it was about $55 million from federal awards, and the government, or the federal government, always has, strings attached and requirements that the district has to follow and comply with. And so the single audit is basically us as the external auditors performing those required procedures that the federal government lays out. And we also did have a couple of findings and recommendations that we'll discuss as part of what was issued within our reports and letters. Did have kind of a quick layout there of the different parts of the annual comprehensive financial report. But I just wanted to basically jump into the results and then kind of from there take a step back and look at some of the trends that I saw within the financial statements. And again, if there's any questions or other items, otherwise not planning on digging too deeply into the financial statements. So I'll kind of combine a couple of the items here. We basically had 3 recommendations. One relating to what we referred to as prepaid items, the next is unavailable revenue, and the third relating to the process for recording self-insurance. I'll say we kind of picked the 3 most technically, accounting related items on here. So these are not kind of the easiest concepts to understand, but we'll spend a minute talking through what that means. The prepaid items would be items that relate to this 2023 school year, but paid during 2022. And so if something's paid in advance, rather than showing that as an expenditure during that year, it essentially goes onto the balance sheet as an asset. And then as the district uses those items or that service is provided, then that becomes an expense in the subsequent year. So the prepaid items related to software subscriptions paid, towards the end of the fiscal year, but really relating to the next fiscal year. So again, as part of accounting standards, that should be shown as an asset rather than an expenditure during fiscal year 2022, and then in it as an expenditure in 2023. Now, this is really kind of a timing issue. It's not necessarily that overall something, the district was doing something wrong. It's showing prepaid items and tracking those is really something that the district does once a year. The district did have, as we discussed a couple of months ago at kind of the start of the audit, the district did have turnover in the finance director role, which typically these once a year items that go into the annual financial statements would be the responsibility of the individual in that role to perform the reviews and make sure that those items are recorded correctly. So when we look at these items, we would say that we can kind of see the turnover that the district had is kind of the underlying cause as to why these items did happen. And we'd also say that, at this point, not to make too light of these, but they're timing issues. They're really not something that I'd be overly concerned about. I guess what it does kind of indicate is that the district has had very clean audits in previous years. And this year with turnover, now there's a couple of additional recommendations, things that weren't being done. If the district has someone come into that role that's very qualified and competent, this could easily go back to having very clean audits. But it is kind of a step towards something happened and now the district does have some recommendations or things that weren't being performed properly. And so we'd be looking for hopefully this to improve next year, and really would want the district to avoid having this get worse each year, which is what we've seen with other governments and school districts that have had turnover at key financial positions at the district. So I guess that's maybe a little bit of my commentary on kind of what I'm seeing in addition to just the, accounting. The unavailable revenue is similar in concept to the prepaid items in the sense that it's really kind of more of a timing issue than necessarily, a process issue. Unavailable revenue is reported, the district has two sets of financial statements. One is kind of a long-term view. The other is a short-term view that's similar to what the district budgets for. That unavailable revenue would represent any revenue that the district has that it doesn't receive within a certain amount of time after the end of the year, essentially saying, if you're going to budget for something, it really should be received shortly after year end, or do you really have that available to be able to budget for? So the unavailable revenue that was missed related to ESSER funding that wasn't reimbursed by CDE until January. So it related to costs incurred by the district within fiscal year 2022, so prior to the end of June 30th, but wasn't reimbursed by CDE until January. So since it was more than 6 months after the end of the year, that was shown as unavailable revenue and something that was found as part of the audit. The third item relates to self-insurance. This is, so the district is required as part of providing dental self-insurance, so basically paying for the dental claims as they come in. The district's required to form an estimate of what amounts will be owed relating to things that have happened during fiscal year 2022, but haven't yet been paid for. And that can be both, just the timing of when claims come in, as well as underlying conditions. So, if someone's having some type of, tooth problem that's going to require going to the dentist, and the district is going to be paying for that. If that conditions happened during fiscal year 2022, the district, under accounting standards, should be recording a liability for that. The district was using payroll withholdings as an estimate of that liability as of the end of the year, but during last year's audit was discussed with the finance director that that liability was really significantly higher than it should have been. And so was something that the district made an adjustment for to, update that liability to what it should be. But I guess our recommendation is more on the process, so that estimate should be evaluated each year, rather than, it's probably been at least 5 years since that estimate was, last looked at. So having that estimate, really kind of updating the process to look at that each year. The result of that is that the change in those withholdings that are collected from employees, those kind of net with the claims that the district pays. And by evaluating this estimate each year would mean that the district would have a much more accurate assessment of how much was incurred relating to dental self-insurance expenditures and claims each year, versus having, these significant adjustments every couple of years. So that is my longer-winded explanation of kind of the 3 items that we had, but did want to make sure that those were a little bit more clear than kind of the very high level that was discussed with the board. So I'll pause for just a second if there are any questions or discussion items with those.
This is Neva Martinez. I just had a quick question, or I just want to make sure I understand that the estimate that you just talked about for dental claims, you're suggesting the district compare what has actually been a claim versus what they're withholding and assess the estimate that way. Is that what I understood? Or
Sure, I'll try and explain it again. It's not an easy,
no,
it's not a simple process. So what's happening is the district is collecting payroll withholdings. So employees are paying into dental insurance, and the district was putting those withholdings into a liability account, and then using part of that liability to pay claims that would come in, as well as using some of the district's own kind of amounts that are put in towards dental insurance.
Okay.
But then at the end of the year, the district was just keeping the liability relating to payroll withholdings rather than updating that amount to the actual estimate of how much is expected to be owed. So the district does use a third party to kind of administer the claims and manage that process. And that claims administrator does provide an estimate of what they believe is kind of a reasonable amount as of the end of the year. That's about a couple $100,000. And the district's estimate was a couple million.
Wow.
So it was significantly higher than what the claims administrator was estimating as, and obviously it's an estimate. Who knows what the number would actually be other than, looking back at the end of the year. But that dollar amount was closer to the amount that would be paid over the entire year rather than just the amount that, is an estimate of the remaining liability as of the end of the year. So the district adjusted, kind of removed that liability, reduced the amount of expenditures shown in fiscal year 2022. And I guess part of the thing to keep in mind is that does impact comparability. So now, rather than showing, the last 5 years or more than that, the decrease in dental claims expenditures each year, those amounts in previous years are going to be higher, and in this year it's going to be significantly lower because the estimate in this year rather than kind of changing it each year.
Okay.
Does that
And
make
then
more sense?
yes, it
And
does.
I'd like
and
to
the
clarify something else on there too,
Oh.
Neva. In regards to this wasn't just the claims. What else was part of the funds that we collect are for, as John Paul mentioned, we've got that third party. And so we were putting those dollars into that liability account for that third party, as well as budgeting for that third party as an expense in the HR department.
Oh, okay.
So I would say over the last 20 years, when we looked at when we made this adjustment, we had been double counting and hadn't realized along the way that those things were happening. So that's another major component for this change.
Oh, okay. That makes sense. This is the first time I heard that even happening. So I just thought I'd get more information. Oh, and then the remaining payroll withholdings will stay in the liability account.
So the payroll withholdings would essentially, at the end of each year, net with the amount of claims expenditures, so that, if the district, say, I'm just going to make up numbers, but say collected, 500,000, and it's way more than that, but 500,000 in withholdings and had 2 million in dental expenditures, then those two would be netted together for 1.5 million in expenditures. And then the district would then estimate, okay, say there's 300,000 in remaining, the estimate of that remaining liability to end up with, 1.8 million instead of 2 million in the actual payments that went out. Hopefully, again, that makes sense. It's a bit of a convoluted process, but really it's just more of that assessment of the remaining liability at the end of the year that we believe should be updated to be performed more frequently.
Okay. Thank you. That makes sense.
Great. Any other questions or comments?
I have one around the prepaid item. Was that considered a past adjustment?
It was corrected
Okay.
during the year.
And then what was the dollar amount?
it was a little over 300,000.
Okay, that's fine. Thank
I
you.
could find the exact. I think it was
That's fine.
around 350.
Okay.
So overall to the district, you know, a decent amount. When you look at the district as a whole, it's not that significant, but we do also assess within each fund that it's in. And so because that was in a smaller fund, it was considered to be more significant than, if it was in the district's, general operating fund. And I guess that might be another point to make, is that the prepaid items adjustment, even though it was about the same amount as the unavailable revenue adjustment, prepaid items was considered to be what we refer to as a significant deficiency. There's kind of 3 levels, if you will, of findings that we can have as part of the audit. The most significant being called a material weakness. Kind of the middle is referred to as a significant deficiency, and then the lowest would be kind of a management letter comment, and that would be the unavailable revenue and self-insurance. A big component of that is the dollar amount. So if there's an adjustment relating to that needs to be recorded as part of the district's financial statements within the audit, if that dollar amount is more significant to the fund that it's being posted to, then that would escalate where that is in the process, or kind of as it's reported. And so prepaid items, again, since it wasn't a smaller fund, even though it was about the same amount as unavailable revenue, was considered a significant deficiency. So that kind of middle level item. And significant deficiencies and material weaknesses are reported within the financial statements themselves within that single audit section. So you'd kind of see more information on the prepaid item recommendation towards the back of the financial statements.
John Paul, since you've noted a couple of times, can you let the FAC know which fund that prepaid item was in?
Yes, if I can remember it, because I didn't have it off the top of my head here. Let me.
Sorry, I didn't mean to put you on the spot.
Yeah, no, that's fine. I'm blanking on which exactly one it was, and I'm just not seeing it in my notes here. I can find it in a minute if that's okay. I just don't want to hold everyone up to look for that.
Sure. That's fine. If you can just before the end, just so that
Sure.
the committee is aware of which fund it occurred in, since you're talking the difference between a management letter and a finding.
Sure. Yep, I can do that. So I did also want to spend just a minute kind of talking through a little bit of the results. I realized that when we're talking about the financial statements, we're looking back at fiscal year 22, meaning June 30th, 2022 is kind of the year end. So this information is a bit dated, but since it's part of the financial statements, did want to spend a couple minutes going through a little bit of kind of what we're seeing in terms of the trends in the financial statements and a little bit more information there. So net position is essentially, in the business world, it would be called equity, is after the district takes its assets less all of the liabilities. Net position would be what would be left over at that bigger picture view. So this is including the district's capital assets, the buildings. It's including the bonds and other long-term debt. It's including the net pension liability, which we'll discuss in more detail in just a minute. So it's including kind of all of those bigger picture items that the district wouldn't be budgeting for each year, but do get presented on the financial statements. So if we look at the last 5 years, you'll notice that the district's net position has been negative for each of the past 5 years, but that negative amount has been decreasing. pretty consistently over the last 5 years, getting closer to, being positive towards the end. This on the net position side, the biggest impact each of these years and the reason why it's kind of slowly getting back to zero is relating to the net pension liability. So the district's proportionate share of Colorado Para's unfunded pension liability, that represents a very significant amount on the district's financial statements, kind of, again, that big picture view of financial statements. And so that's kind of the reason why these amounts are negative, and improvements in Para's unfunded liability is really the reason why it's, or at least the biggest reason as to why this is continuing to get, again, closer to that positive position. So if we look at the net pension liability, and this is presented for an additional couple years, you'll notice fiscal year 18 was, I went back 5 years on the net position data. Here, the net pension liability came into effect with fiscal year 15, so that was the first year it was presented. And so I've got every year since it's been required to be shown on the district's financial statements. And so you'll see that that net pension liability has kind of continued to decrease each year. You probably say, okay, well, you told me that the change in the net position is primarily impacted by the net pension liability, and that makes sense given how significant some of these dollars are. But why is the net position so, it forms almost a straight line here in terms of kind of the trend, whereas the net pension liability is not nearly as kind of straight of a line as it decreases. And the reason for that is that the accounting standards that added pensions, they do include kind of provisions that smoothen or kind of straighten out the impact of changes to the net pension liability. So for example, the change from fiscal year 18 to fiscal year 19, there was a big actuarial change. So the discount rate used by Para in fiscal year 18 was much lower because they had failed a test that said, they're not going to be able to fund Para past 30 years at the current projections. And so they were required to use this lower interest rate, which then had, a significant spike in their liabilities. That changed in fiscal year 19 to where they passed that projection test. But instead of showing this, massive, almost double change in the district's pension expense, that gets smoothed out over a number of years. And so that's why, it looks very straight here, is because those pension changes are, there's a smoothing effect within the accounting standards. So did want to kind of point out that these graphs, while they don't look identical, they really, it's pretty much the same information as to why they're, why they kind of look the same. There is one other item that I wanted to point out on the annual financial statements. It doesn't normally come up anywhere else, so I did want to, as a refresher, remind you of the net OPEB liability. OPEB stands for Other Post-Employment Benefits. This is a healthcare premium subsidy that Para provides to retirees. So you can kind of consider the net OPEB liability to be a small part of the net pension liability, but it is presented separately. So just wanted you to be aware, if you aren't in the government accounting world and don't see kind of OPEB referred to frequently, that's what that relates to. So as I mentioned, the district does present 2 sets of financial statements. What I was looking at in the last couple of slides is on that long-term view. And now with fund balance, this is equity, so assets minus liabilities. but on this more current view. So this is what each of the funds are presented on, and then that long-term view is district-wide. So this is looking at kind of the trend over the last 5 years of fund balance. You'll see that overall, the district's fund balance has been decreasing over the last 5 years in total. But if you look at the kind of lighter green shaded part of the graph, that relates to the capital projects fund. And the fund balance within that fund is primarily the unspent bond proceeds. So the district issued bonds in fiscal year 17 and then a smaller amount in fiscal year 19. And so that kind of green really represents more of the district spending down those bond proceeds, which while it does decrease the fund balance shown, that's not necessarily a bad thing. That was the intent of issuing the bonds. And so kind of showing that decreasing closer to zero and becoming, a smaller balance is expected. And you'd see the darker shaded part of the graph that represents kind of other fund balance. And that shows that the district has increased its fund balance or a stronger financial position over the last 5 years.
And I do a quick follow-up. According to the IRS, they really want my my light green or light blue to be down to zero. So there are rules, which is why we're spending those funds down, within 5 years of issuance.
Yep. And again, kind of what you'd expect, and the whole purpose is so that the district can improve its facilities and again all of the purposes that the bonds are issued for. So I'll pause for another moment. Any kind of questions? And again, that's kind of about as far into the financial statements as I was intending to go. I do realize it's over 150 pages of financial information. We're summarizing it on just a handful of slides, but wanted to be respectful of everyone's time and not get too far into the weeds. Okay, hearing none, we will continue to move forward. Again, I guess kind of as a brief recap, I would say really this is all positive information from the overall financial position of the district. So no significant concerns as we kind of look from a big picture perspective at the financial position. So moving into the single audit results, again, this is over federal awards. There's a schedule referred to, shortened to the CFA, but it's called the Schedule of Expenditures of Federal Awards. This is essentially a schedule at the end of the financial statements that shows how much the district is showing in federal awards for each fiscal year. For fiscal year 22, as I mentioned kind of at the beginning of the presentation, the district did receive about $55 million in federal awards. As part of that, we are required to, or I guess most of what the single audit relates to is the federal government puts out procedures that basically outlines exactly what they want auditors to do. There's a formula for which federal awards we look at, and then what specific compliance requirements and internal controls we look at within each federal award. So the federal awards that we were required to look at were the child nutrition cluster, which relates to the breakfast and lunch program, the elementary and secondary school emergency relief fund, or ESSER, and then also the emergency connectivity fund, which was a new federal award for fiscal year 22. And so the second, or the kind of the ESSER and Emergency Connectivity Fund, both of those are COVID relief funding related, whereas the Child Nutrition Cluster has been around for a long time. So we did test those 3 programs, have the dollar amounts listed for that. So that's testing, over half of the total federal awards. And we're pleased to report that we didn't have any compliance findings or other issues noted as part of the single audit. So kudos to the district for really having a good system in place for making sure that all of the compliance requirements, or at least the ones that were required to test as part of the annual single audit, that there were no exceptions or issues noted. So I'll pause for just a second. Now that's positive news, so maybe no comments, but I'll pause for just a second if there is any comments or discussion items relating to the single audit.
I have a quick question. When do those funds run? Maybe you said this. When do we have a timeline when we have to have those spent? Like the items under major programs, those things?
So the ESSER funds, the final amount that we've got left is on ESSER 3, and that's September of 2024. That's the emergency connectivity is a reimbursement basis. There wasn't and that kind of goes along with the E-rate program.
Okay. And the nutrition cluster, is that how we funded lunches? What was that?
Yes.
Okay, great. And so that's spent.
Yes, all of these are spent.
These are all spent. Okay.
Because all of the dollars that are listed on here, we get back, we spent, and then we get back on a reimbursement basis.
Okay. Thank you.
Mm-hmm.
Yep. So I apologize if that wasn't clear. The dollar amounts here, what was spent and to be reimbursed, the majority of which was reimbursed during the year. Again, ESSER, there was a little bit of a delay with some of that funding. And so part of that was, received after the end of the year. But otherwise, all of these would be expended within the fiscal year and reimbursed relating to the fiscal year. Any other questions or comments? All right, so to kind of wrap everything up, there is one other letter that is included to the board and to management of the district as part of our audit. We refer to it as our governance communication letter, and really it outlines, as auditors, we have a number of things that we're required to communicate each year as part of the audit. And so what this letter is basically has outlined every single thing that we're required to communicate. It kind of lists all of that out. Most of it is very templated. And so if you compared last year's letter with this year's letter, you'd notice that they look very, very similar. The couple of things that were different were within the accounting policies. The district did implement GASB 87, which GASB stands for Governmental Accounting Standards Board. That's the standard setting body that creates government accounting standards. This new standard relates to leases. The impact of that on the district was that the leases that the district has where it's the lessor leasing out building space is presented now as a lease receivable. So it basically increases what's presented on the balance sheet, though it doesn't really change what's presented on the income statement. So your revenues recorded each year are still, a close approximation of the cash received from those tenants, but the lease receivable is now included and disclosed within the financial statement. So that's kind of the big impact of that change. And then the district did also change the criteria for determining unavailable revenue. The district's policy for unavailable revenue was, I believe it was 120 days for grants after the end of the year. The district was looking at kind of the general timing that CDE takes, with CDE, the Colorado Department of Education, being the state entity passing through the majority of the revenues that the district receives from the state and federal government, and did extend that to 180 days. So if and amounts received within 180 days after the end of the year and relates to the previous fiscal year, then it is shown as revenue rather than getting put into that unavailable revenue category. We think that 180 days is, it varies district to district. Generally, it's between 60 days and 180 days that we see for unavailable revenue. The state's unavailable revenue policy is actually 1 year or 365 days. So the district is less than that and kind of within that mid-range of what would be expected. So that change, did want to just mention that that was a change in accounting policy, but that we do believe that that change is reasonable and not something that the district would be intending to change each year, and probably would be leaving it at 180 days for the foreseeable future. So going through the other required communication within the corrected misstatements, we do have the 343,000 to prepaid items, 365,000 to unavailable revenue. So those are the two audit adjustments. Everything else really is very similar to previous years. Nothing of concern to note there. So that's everything that I have for the audit. I'll pause, I guess, one more time if there's any other comments, or I guess I should also just say that I know the district did have, it was definitely a more challenging audit than it's been in previous years, as we kind of see with some of the recommendations that came up. But with the two individuals that we worked kind of closely with and were the ones responding to all of our audit questions in previous years were two individuals that left the district kind of at the end of the year. So that's definitely a challenge when the district's finance department was kind of spreading a lot more responsibilities around. So understand that that was, a more challenging audit this year, but really appreciate all their hard work and effort in responding to all of our questions and getting us everything that we need as part of the audit.
Does anybody from the committee have any additional questions?
I do not. Thank you. Thanks for the presentation, and thanks to staff for adjusting mid-flight this year.
I don't have anything. Thank you.
I want to thank John Paul and the whole team at Clifton. As he noted, he really kind of undersold the amount of support that our audit team gave us this year. And truly, without this partnership that we have with John Paul and his organization, it would have been a lot different outcome than we had. So as much as he notes that we were cooperative and helpful and everything, on the other side, they were amazing. And so John Paul, kudos, and thank you so much for you and Alicia and the whole team that really helped us through this whole audit this year.
Yeah, thank you. I appreciate that.
Okay, if there's no questions, I think that we are on to potentially our next item. I think, oh, and then John Paul, if you'll just put in the chat before you leave the fund on the prepaid.
Oh, yeah, I will do that.
Thanks so much. Appreciate that. And so I've noticed that I think Heather, I thought I'd seen Heather join.
Yeah, Heather joined. I'll check with Jeannie. It's a little bit early. They're supposed to start at 9:10. I can check with Jeannie and see if she can join now too.
Okay. Yeah, if we can get that, that would be great. While we're waiting to see if we can get the folks in here for the penalties and late fees. Sonia did put a link in the chat to the Google Drive, which has the document in it, your working document, so that we've got that. I don't know, she hasn't done it recently. So Sonia, I'm not sure if you can hear me, if you can put the link in. Oh, there it is. It's at the bottom. She did it. And the tab that you're going to go to is 2.4.5. That's going to be our penalties and late fees. It's the third tab in. And it looks like we've got both Heather and Jeannie. Thank you, ladies, for joining. We're ready for both of you. As a reminder, 2.4.5, that policy prohibition is we shall not allow the organization to incur penalties in material amounts for tax payments, other government ordered payments, or other payments, or allow any filings that are overdue or inaccurately filed. And so Heather and Jeannie, if you can share your screens and give us the update on this, that would be great.
I don't know what screens you want me to share. I don't have it.
Turn on your video, please.
So I'll go first. This is Heather. We don't have any penalties or fees. Every payment that we make, whether that's tax payments, payments to para, they're all on time and we don't assess any fees.
Okay. And according to this, when we're looking at the superintendent's, interpretation, it's any payments that are made without incurring late fees in excess of $1,000 in a fiscal year. So Jeannie, on the accounts payable side, were there any late fees processed during the reporting period?
No, there were not. If we, when we see invoices, if they're past due and they say they're going to charge us a fee, we always contact the company and they always remove it. So we do not pay any excess fees.
Okay. And do we track, is there somewhere that we keep or track our on-time payments or late payments or any sort of, as far as the system tracking due dates compared to payment dates?
Well, the due dates, we always pay off the terms of the invoice. And so we always put the invoice date in when we enter the voucher, and then it will calculate if they're net 30 or net 10 or net. And we can always change it too if we need to pay a little faster if we have to. But yeah, so that's how things are handled on our side.
Perfect. That's great. And Heather, on your side, on anything as far as payroll goes, we've submitted all of our payments to the federal government, any sort of state payments on time. So there's no late fees associated with any of our payroll liabilities or taxes, correct?
Correct.
And is there anywhere in the system that we keep a report if we had to pay a late fee for a penalty associated with late tax payments, it's or submissions to, say, the IRS? How would we note that? Where would that go in the system?
It wouldn't be on the HR side, probably on the finance side. Honestly, I'm not sure because we've never had to pay a late payment, but I'm assuming it would be on the accounting finance side of the PeopleSoft system, as far as tracking, and also in our bank, in the bank file.
Okay. just making sure that the committee knows that there are ways that if they asked to run reports out of the system, that we'd be able to prove that no late payments were made and that invoices are paid on time. So does the committee have any questions in regards to 2.4.5? All right. Josh, I saw you went off. Did you have a question or?
No, I'm good. I was just gonna say I have no questions.
Okay, great.
I
Well,
have
thank
one,
you.
oh, I have one quick question. So when we call these companies, do we just say because we're a school district and we're a nonprofit that is that how we get the late fees waived if somebody tries to charge us one?
Yes, yeah, we
Okay.
do.
Okay,
And
and
they're
then
always, yeah, and we rarely have that because we pay pretty quick. But yeah, we just call the companies and just talk to them about it, and we've never had to pay those. So
wonderful. Okay, thank you.
Okay. Thank you to both Heather and Jeannie. We appreciate that. And I think that's all we've got for both of you.
okay, thank you.
Mhm.
We'll have,
Yep.
we'll have John joining in just 1 minute. I asked him to join at 9:10 instead of 9:20.
Oh, so he should be here shortly. We're
Yes.
cruising right along this time. We're getting all kinds of stuff done.
We are.
Woohoo!
Yeah. And I really do appreciate everybody joining us today. This is great, and a lot of good information shared. And it looks like John is here. So that we are all aware, at this point, what we are discussing is 2.4.6. And so right next to the 2.4.5, you only have to go one to the right on your working document. And 2.4.6 is we shall not fail to aggressively pursue receivables after a reasonable grace period. And the interpretation is there is a monthly attempt made to collect accounts receivable that are past due by more than 30 days. And so, John, why don't you explain to the committee specifically what the district does on a monthly basis in regards to fees?
Okay, so we have a couple of different things that we do. On a monthly basis, we send out an email to all households that have an outstanding balance of more than 30 days to say what fees are outstanding and where they can pay them and methods to pay them. Also, twice yearly in November and March, we send out a paper mailing to all households of the same nature that have any outstanding fees in order to inform them that way. In addition, when we transition students between schools from elementary to middle to high school, and then when they graduate, we also make sure to collect any outstanding fees that exist before they transition between school types.
Perfect. And in our last reported financials, which would be as of year ending December 31st, or month ending actually December 31st, 2022, what is our outstanding receivables balance for active students in those different the fee categories? And while John is looking for that, I will note that one of the categories that we've got outstanding fees in when we report during the school year are going to be nutrition services fees. Those fees, based off of the requirements of the nutrition program, are cleared at the end of every fiscal year. And so there may be fees in the middle, but those are always taken care of and zeroed out at the end, whether it be from donations that we receive from other families to help pay off outstanding student fees, or the district covering that out of its nutrition services fund. And John, have you found those amounts?
Sorry, I had just launched my laptop. I am grabbing them right now.
Can I ask a question? So when does the didn't the state just pass that we're going to provide, the state is going to be paying for lunch fees now going forward? When does that start? Is that next year? Fall of 23 or, okay.
Correct. Yep.
Great. So then what can we do with our nutrition services money?
Well, our nutrition
is it going to stay there?
So understand, our nutrition services money is not covered, does not fully, so students that pay do not fully cover the costs of the meals.
Okay.
But our nutrition services department is allowed to use those dollars to improve the kitchens, make adjustments on capital improvements in the kitchens. They can also look at making adjustments to different food offerings, qualities, and changing up the different fresh fruits and vegetables that they provide to our students. And so I know that Molly Brandt, our nutrition services director, is working diligently with her team to make sure that not only do we stay in a solid financial situation for that fund, but that we are improving the experience for all of our students at mealtime.
So it'll be used, likely it will be used to supplement whatever the state provides, and we'll probably just supplement, like you say, with with additional fresh fruits and vegetables and things like that. And will we be able to offer, I know that we have resource closets, and I know Food for Hope does some of that and the Adams 12 Foundation, the 5-Star Foundation. Would that be something maybe that's a question for another time, if that'd be something we'd look at in more sending weekend packages and things like that?
Yeah, that's something that we'll have to ask Molly. Quite honestly, I don't know what her plans are, but we will do a follow-up with her and then get some information out to you guys in regards to what some of the options are and what they're looking at.
Great, thank you.
Mm-hmm.
And
I have a quick question, if I can ask.
Oh,
sure.
Yeah, so those free lunches that will begin in the fall, does that also include breakfast, and does that also apply to charter schools?
So it's all the public schools. So yes, your charter schools are going to be included. And I don't know about breakfast. So again, we'll follow up with that question with Molly, and she'll be able to tell you, because quite honestly, I don't know the details of that program.
Great, thank you.
Mm-hmm.
And as far as the outstanding...
Wait, hold on, John, real quick. I think we got one more question.
Sorry. Hey, John, Susie, I'm looking at the list of the fees. I see that some go back to 2010, 2011. At what point are you required to write these off?
So there is not a requirement to write them off. What we do is based on, that's why I asked John the difference in regards to outstanding fees for active students. What we do is we do keep the list of what we would consider non-active students that are no longer in the system, whether they've moved out or they've graduated. Those are ones that we do report to the board. And then we look at having conversations about at which point do we do that write-off to get that done. But there isn't in this particular, in the accounting rules, there is not like it is with corporate. They're not technically considered bad debt. So there isn't a rule as far as write-offs.
Because I'm wondering what the likelihood is, especially if they're inactive, right? If it's going back 10 plus years, like if you're actually going to be able to recover those fees. And then do the schools ever offer up, like out of their PTA balance, like do they ever try to assist with some of the fees? I mean, I know I personally reached out to like my school to see if I could help cover some of the kindergartner costs for people who have, financial constraints. But like, is there do you work with the school itself to try to prevent it from going this far? Because I just feel like once it gets past like even 5 years, it's probably pretty hard to recover the costs.
Sure. John, what support do you provide the schools in your position on the receivables? Do you work with them on any of that?
So the district policy is just if a school has any outstanding fees that are associated with the student, it's always up to their discretion as far as whether or not they want to waive them. For a lot of the ones that are that old, when it's fairly obvious that we're not going to be collecting the fee just because it's that old or the student has already left the district, they normally will just waive them on their own. Sometimes a PTA or a support group or a scholarship committee or some other sort of school fund will cover the fees for students like that. But it's always been up to the school's discretion as far as whether or not they want to waive fees, because it's revenue that they're foregoing if they decide to do that.
Okay, thank you.
Can I ask one more question before we move on? Just to clarify, are the fees attached to the students or to the families? Like if a senior graduates, but there's younger siblings in the district, does the district try to continue to collect fees from the family, or is as soon as that student graduates, those fees are kind of gone?
So I'll answer. The fees are tied to a specific student account. They are not tied. I mean, there may be other students in the family, but they are specifically tied in Infinite Campus to the individual student's student number.
Okay, thank you for clarifying.
I have a quick question. I'm looking at the list of fees. What is I keep seeing Destiny. What is that referring to?
Library books.
Oh, okay.
Or it's not just necessarily library, it's how we check out library books and other textbooks. The name of the system is called Destiny, which is why it's coming up as a Destiny charge.
Thank you.
I have a question. Is the students allowed to take lunch or breakfast if there is no sufficient funds in the account?
Yes, so we still feed all of our students, even if there is not sufficient funds in the account.
Because in my personal experience, I typically set up automatic refreshment, but sometimes I forgot the expiration date. My son would be reminded. It seems they are more aggressive than average.
Yeah, we do check and make sure, and we do send notes home and things like that with the students to remind parents about that, but we will not let a student go hungry during the school day.
Oh, okay, thank you.
And I know we keep bombarding you with questions, but if a family were to openly say that they couldn't pay fees, but they would like to somehow contribute, are there any options that they have as far as like volunteer work or, you know, services that they could provide in exchange for the fees? Or is it just straight financial exchanges? Either they can pay it or they can't.
So we do have a system in regards to, we have families apply if they qualify under the free and reduced lunch program and those guidelines. We do adjust fees for not just meals, but all of our student fees are adjusted as well, associated with that status. On other items, those are going to be conversations, as we've mentioned before, at individual schools if they need to make temporary adjustments outside of kind of the normal formal process. Those are conversations you'd have directly with your school. Okay, John, I think we're ready for those numbers.
So as far as the active student fees, it's 1.977 million for the outstanding active student fees based off of the December report.
Okay, and so those are the families, all of those are the families that'll receive the monthly mailing as well as, or the monthly email, as well as the twice a year physical mailing, correct?
Yes, that's correct.
Okay, are there any other questions on this topic? All right, John, thank you so much. We really appreciate your time this morning.
Thank you.
Okay, those are all of the formal, in case if anybody hadn't seen in the chat, Sonia checked with Molly, and yes, breakfast is included next year in those free meals. I think at this point, we are done with the formal portion of the meeting and we're going to be moving into the working session. So if we can stop the YouTube